And let's get more on all of this and what's moving the markets with Josh Mahony, Chief Market Analyst at Scope Markets. Josh, you're welcome back to the programme. Always good to see you. Thank you so much. So, first of all, these Chinese stock markets getting a big boost, it seems, from the industrial profit numbers.
Yes, certainly. I mean, this is a good news story, undoubtedly. There's been a lot of fear about what's going to happen with the US-China trade spat, essentially knocking sentiment within some of the producers within China. But notably, what we're seeing here is, of course, a significant ramp-up in profits. And remember, when you look at company earnings, for example, you see the revenue side of things and then the profit side of things. And the profits generally come down to the margins. What this has come as a result of is the squeeze from central governments in terms of the overproduction of many of these manufacturers and the price wars that have been underway. If we see a minimization of those or a dampening of that price war, then you see improved margins and improved profitability, which is exactly what we're seeing here.
And how sustainable, Joshua, do you think the current bull run is?
Well, as you've alluded to, a decade long high that we're seeing in terms of the Shanghai Composite, notably a 4-year high for the Hang Seng. Remember, the Hang Seng heavily invested by international investors, Shanghai more so a domestic focus. So certainly there is a feeling that we're seeing an increased confidence after many years of some jitters around the credit market, around the real estate sector. It feels like the domestic market's really picking up steam, and from an AI perspective, globally, we're seeing that the value may be within the Chinese AI play rather than just the US ones because of the high multiples we're seeing in that area. So I still think that there could be plenty more to go.
OK, let's switch over to the US markets now. We can expect some new highs, can't we, this week?
Well, we've already seen them today. We've seen the S&P 500 hitting a record high, the NASDAQ leading the way. Remember, the NASDAQ is the kind of market, very tech-focused, that's going to lead the way as you see rate cuts. But also this week, of course, we've got earnings for 5 of the Mag 7 names coming out as well. So the possibility of perhaps rare earths flowing back in their direction, there's plenty of good news at the moment that's leading equity markets, in particular the big tech names, higher.
The Nikkei also breaching 50,000 for the first time this week.
Exactly, yeah. I mean, this has been the big runner recently in terms of Japanese stocks. It seems like every time I look at the Nikkei, it's up another 2% on a daily basis. This comes after we have seen a new Prime Minister coming into play. She has come in on a ticket of being a lot more expansive when it comes to fiscal policy. Now, they might have to rein things in. Inflation's elevated and the Bank of Japan might hike rates soon enough. But certainly markets at the moment focusing more on that expansive fiscal policy from the new Prime Minister. That's why we're seeing stocks on the rise.
Right, you mentioned the BOJ, a heavy week of other central bank meetings as well, isn't it, with the Fed and the European Central Bank, the Bank of Canada as well. What do you think the key message from policymakers is going to be?
Yeah, exactly. 4 of the big central banks reporting this week. 2 of them expected to cut rates. That's the Bank of Canada and the FOMC. A pause from the ECB. They're probably going to reiterate that they're pretty much done now when it comes to easing. And then the BOJ side of things, like I said, there's a good chance that we do in the coming meetings see them raising rates. So they're all kind of moving in different directions. Ultimately, it's always a case of being data dependent. Well, the US doesn't have that much data, but certainly that's always going to be the narrative. But certainly it's interesting because you have them all moving in different directions. So from an FX perspective, it does provide significant volatility.
And finally, just a word on European stocks, modestly higher. What's holding back stronger momentum there?
Well, look, they've seen a significant boost, many of them, most notably the DAX, off this idea that we're going to see increased infrastructure spending, increased defence spending. But at some point that boost sort of runs out and you realise that you're sort of just investing in an area that's not particularly high growth. They don't have the big tech names to rely on that the US has. And certainly there's confidence returning to the US. So when it comes to investing in companies sort of in the English-speaking world, a lot of the time you just generally go with the US over European stocks, and certainly with the sort of resurgence, some sort of resurgence of the US dollar against that sort of reiterates that narrative.
Josh, always great to get your insights. Many thanks indeed. Joshua Mahony, Chief Market Analyst at Scope Markets.